Hello and welcome everyone. In this video, we are going to talk about accounting equation. This is a very fundamental concept. So in this video, we are going to look at what accounting equation is and what are the two categories in assets, liabilities, and equity, which are basically coming from accounting equation. So what is accounting equation? Accounting equation is assets equal to liabilities plus equity. And this is what balance sheet is based on as well. So I've given you an example here. So you can see we have assets on the one side, which is on the left-hand side, and on the right-hand side, we have liabilities and equity. So if you look at the equation, you see the total assets is equal to the total liabilities and equity. This is always the case, always the case. If you cannot balance it, then you are doing something wrong. So very fundamental accounting equation, that is assets equal to liabilities plus equity. Now, each of the category, each of the item, let's say asset has two categories, liabilities has two categories, and equity per se has two categories. And there are other items in equity as well, which you can see here, like retained earnings, and then you will calculate the total shareholders' equity. This is another diagrammatic representation of the equation assets equal to liabilities plus equity. What assets are? Assets is what the businesses have, what you own, and then liabilities are what you owe. So what you have to pay, what business has to pay, business has to pay. These are also commonly known as obligations. And equity basically includes the capital of your investor, profit and losses made in the business. So basically what you get, right? Moving on to examples of current assets and non-current assets, because there are two categories here in assets, which is current and non-current. So examples of non-current assets, they are also commonly known as long-term assets or fixed assets. Such assets would include machinery, equipment, land, buildings. So these are all long-term assets because these are assets which are going to be used by business for the long term, more than 12 months. That is more than 12 months. Another category of assets is current assets, which include inventory, cash, accounts receivable, prepaid expenses, supplies. You can also watch my video on inventory and accounts receivable, where I explain what inventory and accounts receivable are. So these are generally assets from which company is expected to receive cash within 12 months. So for example, you have inventory, you expect it to sell within 12 months, within normal business cycle, and convert it into cash. Moving on to examples of current and non-current liabilities. So non-current liabilities are also commonly known as long-term liabilities, are bank loans and debentures, and any type of liability, any obligation which has to be paid after 12 months. Any obligation to be paid after 12 months. That's the rule. That's the classification rule between current and non-current, whether it is asset or whether it is liability. Examples of current liabilities will include accounts payable, bank overdraft, or any obligations to be paid within 12 months. These are some simple examples of non-current and current liabilities. I can also show you these items on the balance sheet in our first slide. So if you see here, so you can see cash, marketable securities, accounts receivable, inventory, prepaid expenses. So these are all current assets, they say here, and other current assets. So these are all current assets. And then this is a section of fixed assets or non-current assets. So from here you can see fixed assets. Similarly here, when you look at liabilities section, there's current liabilities, which include all these categories like accounts payable, current portion of long-term debt, taxes payable, accrued expenses, and then you would have a non-current liability as well, which is long-term debt. So the business has to pay the long-term debt after 12 months. Then within equity, you would see, in equity, we have two different types I have mentioned here, which are preferred and ordinary shares. So this one, common stock, is ordinary stock. And then you would have retained earnings. You can watch my video on financial statements where I talk about retained earnings. And then you have then you sum it up and then calculate the total shareholders' equity. You add the total liabilities. You add this total liabilities with the total shareholders' equity to get this number, total liabilities and total equity. Right? Always, I will repeat again, assets are always going to be equal to liabilities and equity. This has to balance, and this is very fundamental accounting concept. If you cannot balance it, then there's something wrong. So we will just do a quick recap on both of the questions that we talked about in this video. What is the accounting equation? Accounting equation is simply assets equal to liabilities plus equity. You can, of course, have different versions like assets minus equity equals to liability, or assets minus liabilities equals to equity. But this holds true always. If someone asks you what is the accounting equation, the accounting equation is, or your answer should be, assets equal to liabilities plus equity. Then what are the two categories in assets, liabilities, and equity? So in assets and liabilities, you would have a current and non-current portion, a current and a non-current portion. And then in equity, generally speaking, you would have preferred and ordinary stock or shares. They are also, ordinary shares are also commonly known as common stock. Thank you for watching this video. Hope this was useful and you find it helpful. So if you find it helpful, please give it a thumbs up and subscribe to my channel. Thank you very much.